303 4 5 Sempre. HEM 이야. กันวันนี้ดีกว่าเพราะว่าพรุ่งนี้มีอันเป็นไปเพราะอาหาเธอ Let go let go กันวันนี้ดีกว่าเพราะว่าพรุ่งนี้มีอันเป็นไปเพราะว่า Watching this, maybe remember in the magic.
Forex trading is so freaking stupid because most people are going about it completely the wrong way. Now, hear me out just here for a second, okay? I've been trading for almost a decade, and from combined Forex, crypto, and stock markets, I've made millions of dollars, okay? And I'm part of the 10% of people that can barely make a profit because 90% of people fail. They're doing stupid things in the chart that has nothing to do with actually making profitable trading decisions long term. And I've also proven this for the past 7 years. I've run a free Telegram channel, which you can join right now. It's got 61,000 members and it started in 2018. And I just share all my analysis, my trade outlooks, paid signals movement. It's completely free. It takes like 5 seconds and you can look at elbow moves and charts on fire and blue profits, green terminals. You can be in there, you can just follow everything that I'm telling you here in this video live every day. If you don't get value from it,
Every night.
it's not that big of a deal. Now let me go into actually why I think Forex trading is so stupid for most people. Most people get into Forex trading thinking that they are going to be able to make so much money and it's going to happen relatively quickly, and their horrible expectations completely position them to lose long term. The other thing that I think is even more crazy is that people make it way too complicated. Think about what you're doing for a second. And I don't mean in any technical, analytical, strategic way. I just mean think about what you're actually doing. You're looking at a damn chart and you're asking yourself, do I think it's going to go up or down? I think you're either buying or you're selling. And if you're smart, you're using some sort of risk structure, whether that's dollar cost averaging, hedging, just using the stop loss is one of the simplest ways to control risk. And then you're letting the trade play out and either wins or it either loses. And if you get enough experience, you can start kind of picking which way price might go a little more than half the time. And if you're just barely right, a little more than half the time, you are a part of the 10% of people that can barely make a profit. And me, even barely being able to make a profit, still made millions of dollars over the past decade from all the different markets. It's not that hard in my opinion, but a lot of people just way overcomplicate it. Let me actually show you some of the trades I'm in literally right now. And you can follow this in real time on my Telegram channel. It's the first link in the description. You can click that button. I'll probably put it in the pinned comment as well. But let's look at some of the trades I'm in right now. So I'm just going to scroll here to the history of this time, just like very recently. I'm just going to show you stuff. So I have called a Euro AUD trade. I have a private little trade group, but that's paid. You don't have to join that. Just join the free Telegram channel. It's fine. You get everything you need in here. So here on Euro AUD, I have sold at a resistance zone. Now here's the super complicated, crazy analysis, right? This really, maybe Forex trading actually really is stupid. It's stupid because of how simple it is, in my opinion. I drew a stupid little rectangle here to represent the fact that price seems to have bounced at this zone pretty consistently here on the daily chart over and over and over again for the past 2 years. And then what did I do when price got into this zone? I simply entered a sell. Here was when I called the trade out this morning. I called it out at 6 a.m. this morning. I share the analysis here in Telegram. You'll see. I say, hey, I just entered a trade, and I show the damn chart with the little arrow thing. It's not that hard to figure out what I'm doing in case you want to follow the trades for free. You can figure it out, and then if you want to be able to chat with me and ask me questions and follow the exact specifics, just join my paid thing. But you don't have to, just join the free Telegram channel for now. This is the trade that I called, right? Here's the stop loss, there's the risk, this is my MetaTrader live terminal, and my broker is Forex.com. And I show my account numbers and everything, control terminals, and I put screen recordings of the P&L history in the Telegram channel, maybe like once a week or once every other week or something like that. But you can see here, I sold right here, I'm risking $5,000, and if it works out, it has the potential to maybe make $10,000. Now, sometimes I'll close the trade early. It just depends on my experience, and if it gets down and then it starts going sideways, then I might close early and something like that. But here's what it looks like for now, right? So what did I do here? Like, there's nothing magical. I would wait for price to get to a really clear support resistance level. In this case, it's a resistance zone that I just thought looked clear to me personally after all my experience on the daily chart. And then I just enter to sell with a stop loss above and a target somewhere below. As long as you have a 1-to-1 risk-reward ratio, that's where you should start because you'll be able to get really good data with that. And you're probably going to have a 50-50 win rate, so half the trades will hit stop, half the trades will hit target. But then you get enough experience where you get to the point where maybe 60% of the time you hit the target and only 40% of the time you hit the loss. And if you're risking the same amount per trade, that tiny little win rate, right? That tiny little win rate of a little bit more than 50%, that's your edge, you're profitable. Then you can start doing dynamic things like managing the trade, closing a little bit early if you don't think it's going to work out, closing it early if it's almost to the target but it barely misses it, you close early. You can do things like that, but in the beginning, just use 1-to-1 risk-reward ratio. Buying and selling, just guessing which way you think it's going to go based on price getting to a support and resistance zone. It's that simple. And on the daily chart, it's even simpler because you barely have to do anything. You can look at the charts like once a day. And I'm not embellishing that. Like on the daily chart, there's one new candle per day. Look at the chart one time per damn day, and that's it. That's all you have to do. You have zero excuse of not being able to trade, saying you don't have the time, or saying it's too complicated, or you're looking at the chart once a day for like 5 to 10 minutes. So I've entered this trade, and here's the terminal, and you'll also see I'm in another trade right here. Let's go ahead and look at why I'm in that trade right now. It's USDJPY. I've been in a buy in this trade for about a week. I think, about a week. I entered it last week. So USDJPY, I'm in this trade. And you see I entered a week ago, daily charts, a couple candles ago, so I entered down here. And why did I enter this trade? It's super complicated, so pay attention. Price came into a major support zone, and I bought. That's the whole analysis. Now again, let me just repeat this, it's going to take me another 45 minutes, so get out a pen and notepad. Price came into a major support zone, and I entered a buy. Now why is this a major support zone? I don't know, I have experience, and I use that experience to help, me make trading decisions, which is why I share my analysis in the Telegram, so that you can start building that experience too, and you can start seeing all the experience and stuff. Here, this is completely irrelevant, has nothing to do with it, but in case you think I'm full of shit, just yesterday alone, I had made $20,000 on Solana that I bought, that I called out literally like the day before I posted this whole long thing that I'm buying Solana, and I called it out. The very next day, I'm up like $20,000 on that. I was up just on this one wallet right here, $100,000 yesterday. And this is just crypto, and crypto has popped like crazy, especially after I added the positions. And the same thing with Forex trades. There's trades where I generally risk anywhere from $5,000 to $10,000 per trade. And on some trades, I'll make like 10K, some trades I'll make 5K, sometimes I'll lose 5K, sometimes I'll lose 10K. And it is what it is. And I show when things are down too. I show things like are down on the month, and then everything's been going way down. And then I also show just all the analysis and the pre-planning and the trade outlooks of what I think is going to happen. And it's all simple, it's nothing crazy. It is just the same old boring trash over and over and over again. It's just so boring I have to yell at these YouTube videos to make it a little bit more entertaining and interesting. Because if I just told you guys the same stuff over and over for years, I would just get bored. I would just jump off my balcony because I wouldn't have the patience to sit here looking at these damn charts all day. It's so freaking boring. Now, why did I enter USDJPY? Again, just because it came to a support zone. I use all my experience to help me find zones that I think price is likely to bounce at. For example, here in the daily chart, price for whatever reason dropped there. Then it came up again, made a little double top, dropped again. Broke above, came and slashed through it here, so it didn't respect it. Here it broke above, here it broke below. But then it came back, found resistance, broke above again, found support, bounced. Now it's come back here yet again. And I just think that it might bounce, okay? So you can draw support resistance zones like this too, right? Where it's like really go really far into it, like, okay, technically price broke through, but there's a support here, this and that. But when it breaks through the zone a billion times like that, or in this case, you count how many times it's broken through, and whatever that time is, if it breaks through the zone a bunch where it doesn't really look clearly respected, or you have to start playing these mental gymnastics of like, maybe it's that, maybe if I just lighten it up, but then it might be up here, and this and that. I just don't do that. I just draw the zones that I think are nice and big and very clear, because from my experience, they're the most likely to work out. There's the most amount of eyeballs on the daily time frame and 4-hour time frame of people making the most decisions, entering big volume at these zones. They just tend to usually bounce. I can't make any sort of statement because it's all subjective and it's all just my opinion. It's just my experience. In my opinion, it works better than trying to trade like bounces on the 10-second chart of support resistance zones. You can still trade lower time frames and scalp using momentum, especially if you have a broker where there's like low commissions and tiny spreads and there's a lot of market movement. It works really well. In Forex, it's kind of hard to do that. Right? I tried doing that and it worked decently, but it didn't work as well as swing trading. I'm using, like I said, Forex.com. My spreads are a little bit higher than most brokers. My leverage is a lot lower than most brokers. So I have to have like hundreds of thousands of dollars in the account just to be able to place small trades risking 5 to 10K. But scalping can still work. It's just swing trading works so much easier in the Forex market. You can make the same amount of money or more, and it takes you just a fraction of the time. So USDJPY I bought because price was here at this zone. Now when did I call this out? Let's actually just go here and look at my actual group. So 223, what is the date today? March 3rd, so I called this out like about a week ago, called this out. And here's where I called it out, 223 at 4 p.m. I posted in here and I put, I'm long USDJPY, here's my stop loss and take profit, everything. This was where I called it out, and that's what it looked like when I called it out. You can see I'm risking $5,000 on this, and if it works out, it will be 10K that I make. And yeah, that was that. Here was the last trade that we took. There was a trade before that. Let's see. Euro AUD. So on the 12th of February, you can see I took a Euro AUD trade, and we're going to go and we're going to recap this one too, because look how simple this is. There's a bounce there for resistance, a bounce here for resistance, broke above, bounced 3 times as support, broke back below, and then it came back and tested it as resistance. And I just thought, you know what, maybe it'll bounce here. It's bounced twice as resistance, broke above, came back, bounced 3 times as support, and when it finally broke below, it came back to retest as resistance. Sue me for thinking that it just maybe might bounce, and if I'm right, I'll make some money, and if I'm wrong, I'll lose some money. All I have to do is be right just a teeny bit more than half the time. And by risking large dollar amounts and putting my money where my mouth is, and doing it live in my Telegram channel for 7 years, and having my paid group where I call every single thing live, and people can barrage me with questions right after. Why'd you take that trade, Nick? And I'll answer it, and I'll respond, I'll do everything. Literally showing it all. I'm uniquely qualified to say that it works. And it works really well for me, and it works really well for some of my clients who get profitable. 90% of people still lose money because trading is risky, and that's just how it works. So with this right here, I sold. What ended up happening? You can see I risked 10K on this one. Depending on the trade, I'll risk anywhere from 5 to 10K, which depends on the trade. This one started going into some profit. All this. This was when did I enter? The 12th. You see the 19th. So about a week later, right? A couple trading days later. Price came down here, barely missed the TP. So I ended up just closing it after it barely missed the TP. You can see this Forex.com spreads. Sometimes I miss trading with degenerate brokers with $2 per standard lot commissions and 500 to 1 leverage and spreads of like half a pip. But I can't do that anymore. I'm no longer an immature child. I'm somewhat of an adult now. I'm about to be 30 years old next week, so I have to start using regulated brokers to make sure that my capital is safe and all that. Barely missed the TP right there, and so I ended up just closing right here. Please excuse me, I'm such a horrible trader. Instead of $10,000, I only made $9,850. That's that extra $150. I'm not gonna be able to take my wife out to a nice dinner tonight because I missed out on an extra $150. Only made $9,800. Please excuse me. This trade took like a week, and I barely had to do anything. And after maybe a little bit more, the swap fees were positive on it, so I don't know. Maybe I came out on top a little bit more. But that was that. And the same thing with all the other trades. So let's look at this Euro AUD trade. Why did I sell that? Because it was a clear support and resistance zone. Price broke below it, came up, tested it. I entered, and then it started to reject, and it came back down, and then I closed it like right down there, as you saw in the actual terminal screenshot. And now, guess what? I'm short again, boys and girls. What's going to happen? It's either going to break above the zone, stop me out for a 5K loss, or it's going to drop here at the zone. And if it does drop here at the zone, then I'll make a nice little tidy profit. Maybe like 10K or around 10K. Who knows what it'll be. Maybe it'll be another $9,800 50 trade, and I'll just have to apologize for how much I suck at trading. Now, let's go look at a few others, okay? EuroCAD was a trade, I think it was EuroCAD or GBP-CAD. Excuse me, it was GBP-CAD, not EuroCAD. I took a GBP-CAD trade. This was a trade that I took right here. So why did I take this trade? Look at how blatantly obvious this is. And what I mean by that is I mean the zone. Look at how blatantly obvious the resistance zone is. When you're drawing zones like this right here, with price breaking through it a bunch of times and it's going back and forth, and maybe it's there, but you have to adjust it downwards here, and then you have to drag it, to thicken it up a little bit, and then sometimes it'll bounce. But then you're like, well, what if it's that down there? What if it's higher up here? It's just ridiculous, right? What if, riddle me this is a crazy idea, but what if you just drew zones that were just very simple and very straightforward, where pretty much price bounces like almost every time it gets there. And then even if it breaks, it comes back and retests and then respects the zone on the retest, and maybe it was a resistance and it broke above and it came back and turned into support and then bounced from there. What if you just traded those clear zones? What if you waited? You did not act like an impatient child like you're used to. I know I'm insulting you and I just met you, a lot of you guys watching this video for the first time. Welcome to the channel. I'll just keep insulting you here as we finish the video. But what if you just waited for the really clear zones and you just entered trades there? What if you just bought at support zones like this that were super clearly here on the bottom of the chart? What if you just sold at resistance zones that were super clear? Imagine how much easier your life would be. Imagine if you just set a damn trading view alert and then the price got there into the zone, you just entered a sell. But I'm going to show you this trade, because maybe you're thinking, wait, so you can show the trade. Here it is, right here. GBP-CAD, this was, when was this? This was like a month ago. 3:25 at 8 a.m. I called this trade, and you can see I risked $10,000 in this trade, and then I had a $10,000 take profit. You can see I just sold here at the resistance zone. It's crazy, right? You don't have to do liquidity, Wagyu beef, bullish, Kobe steak, candlestick, entry, smart money, distribution, order block, fair value accumulation gap, institutional imbalance, entry, trading, candlestick, entry, Japanese strategy. You don't have to do any of that shit. All you have to do is look at the chart and ask yourself if you think it's going to go up or down. Support resistance is a very easy, very quick way to do that. In my very humble opinion, while still say for legal purposes to protect me from getting sued, that trading is risky and most people lose money. And nothing that I say here constitutes financial advice. You shouldn't do any of this. You're literally more likely, and I mean this dead serious, you're more likely to make money going and working at McDonald's, even just part-time. You would make way more than most people who are trading, because most people who are trading lose money. That's absolutely horrendous. But again, most people are doing stupid shit that has nothing to do, like people are doing so many things that just don't matter, and they're doing those at the cost of the things that really do matter, like keeping things really simple, and then having a set risk per trade, or at least having a set risk per account that you only deposit a certain amount into the account that you're willing to lose, and you just use high leverage and do that. Whatever your risk structure is, you just have to find a way to control risk that aligns with your risk tolerance. Then if you're keeping things real simple, there's not much to do, right? You get to the chart, you set an alert. I waited on this for like days until I got here, like a week or two, and then I finally got there and I got the alert. What did I do? I think I was eating a sandwich. I think I was eating a Chick-fil-A chicken sandwich, and I got the alert, and I was like mid-bite, right? I'm chewing my chicken sandwich. I couldn't even dip it into the Chick-fil-A sauce because I had to enter my trade. I had to put my chicken sandwich down, and then with my greasy hands, I had to enter my trade on my MetaTrader 5 terminal. And then it took me like a minute, and then I called it out there in the chat, and then that was it. There's barely any. If I haven't convinced you it's that simple, my God, join the Telegram channel, you will see I'm not screwing around. I have to post stupid shit in there just to keep people engaged, because there's so little to post about actual trading, because I don't play all these mental gymnastics like most people do. I sold right here. What happened? This ended up, let's look, right? This was 7:11 p.m. Price came down. This was it right here. I closed right there. We had some swaps. Swaps took out a little bit of it. Please excuse me. $74 a swap. So maybe I made like $8,500 on this or something like that. Maybe like $8,400 or something like that. But I closed it there. It technically hit take profit, but it didn't fill the spread. So you can see how it got to the TP. That was around 4 p.m. This trade took literally 12 hours. Most of my trades take about like maybe a week or so. Sometimes like a couple days, sometimes like 2 weeks, 3 weeks. But most of the trades conclude in about a week. This one happened to conclude in how long was this? Like 12 hours? When did I call it out? 8:40 a.m. and I closed it at 7 p.m. So about like 10 hours, right? Yeah, it's about like 10 hours. Same day, 2-3, 2-3. So this was February 3rd. I closed it, and that was like $8,600 in a day. I made a YouTube video where I literally show my whole terminal right here, where I've made like $30,000 this month or something like that. Yeah, I even made a YouTube video about it. Like, it's just, here it is. Here's my terminal right here. This is a Telegram. I posted it. That was right after the Euro AUD trade. And then this was that Euro AUD trade right there that I closed. I go and I change the history to show February, all of February. Just this past month, it was $26,000. And that was for, oh no, this was even more. This was past that. This was in January too. I've made even more since then. Like, you can go scroll through there. There's too much. I post too much stuff on the Telegram channel. Just literally, if it's not better than your group is paid group, please, by all means, leave my free damn Telegram channel. Just, get in there in 10 seconds. Just scroll there through a minute, and if you don't like it, just fucking leave. It's fine, man. It's okay. Just whatever you want to do, just here trying to help. That's all. Okay, Euro JPY. I'm waiting on this trade. This trade did not set up. Okay, now what have I done? I'll show you my super Harry Potter Hogwarts magic tricks here that I'm doing. I drew a stupid zone here. Okay, this is sort of like before the zone. And I'm just like, wow, for some reason, price seems to be bouncing a lot here in this general region. So what did I do? I just drew a zone. And if price gets into the zone, then I'll buy. And if it doesn't, then I won't do anything. I'll sit here and wait. I'm not an impatient idiot like you. But hopefully after this video, you won't be an impatient idiot. And you can move from the impatient idiot to being the patient, wise monk who just sits and meditates in your orange jumpsuit thing, and then you're super zen and you're super happy. You wait for really good trades and not be a complete idiot and stop losing money like 90% of people. I'm waiting for this. If this doesn't set up, then I won't be taking it. Same thing with GBP USD. I took a trade right here. You have to scroll back in, I think, January to see this. It's like a month or two ago. I took a sell here at this, right here at this zone, and it came down and worked out. And that hit the profit target within like I think a week and a half, a week maybe. I sold right there because this was a really clear daily resistance zone. What am I doing now? I'm doing the same damn thing. I have a zone right here where I think price is bouncing. Why do I think this is bouncing? There's resistance there. There was support right there. I'm trying to know it's kind of hard to see, but like it bounced as support for a second there. Then it came and bounced as resistance right here again. Then it bounced as resistance, resistance, resistance. Broke above, came back. This was a deep test of the zone, so that's why like sometimes you have to like adjust it to like just encapsulate all of price data. You don't want your zones being like that, but at the same time, like you still have to encapsulate the price data. That bounced as support, broke below, found resistance. You know what? I'm just thinking maybe if it gets up there into the zone, right? And you'll notice my alert is not like down here, right? My alert's not like the moment it touches the zone, bro. No, it's like literally towards the highs up here of where price has extended deep into the zone in the past, right? All of these highs, that's where my alert is sitting. You know what? If it doesn't get there, I don't care. I won't take the trade. I'd rather wait for a really good trade and then put my money where my mouth is and risk like $10,000 on it than just sit here like, maybe I'll enter as soon as it gets into the zone and I'll just hope it works, and then it just sits in drawdown for a week or two while it goes to the area I thought it would. And I could have entered there, had a better risk structure, but instead I'm in a stupid trade, risked half of what I could, and it's halfway to the stop loss, and I'm waiting and hoping it plays out so I can just get out of break even. You don't have to play those stupid games if you just like draw the clear zones and then settle it deep in the zone. If they don't set up, they don't set up. If it doesn't work out, it doesn't work out. It is what it is. So I'm waiting for this to happen on GBP USD. Maybe it'll set up, maybe it won't. Euro, Canadian dollar. I'm waiting for price to get here into this resistance zone. I know what I'm probably going to do. You never know exactly what you'll do. I never know exactly what I'll do because it's all context-based, it's all intuition, it's all discretion. But what I'm planning on doing, in general, for the most part, hypothetically and figuratively speaking, is I'm waiting for price to get into this zone before I bounce. Now, you'll notice I haven't set my alert like down here, and I'm not like FOMOing in the moment it gets into the zone. No, I want it to really push deep into the zone. And in this case, you're saying I'm waiting for it to go all the way to the extreme high. Meaning if it doesn't, if it just comes to these highs earlier, I mean, I might enter there, but probably not. I'm probably just going to wait for it to go and get all the way to the most extreme portion of the zone. Because what I know is that if I enter here, right where it's at right now, what is my risk structure, right? I'm going to enter, my stop loss has to go at least, a good amount above the zone. You don't want it to be just above the highs of the zone because then you could just get pinned out on spread or a wick. You don't want it doesn't have to be crazy up here, right? But just something like reasonable where if it just goes and pins the tip top of the zone, you're not going to get thrown out. That is the first scenario, right? If I enter just FOMO in right now, we're super just gambling degenerates. We're technically gambling to begin with because with forex trading, you're taking your best guess. You're placing a wager on an uncertain outcome, which is the definition of gambling. But I mean, in that case, for being philosophical here for a second, everything in life is a gamble, right? You don't know if you're going to be able to make it to the grocery store today in your car. You could die in a car accident, right? I hope you don't worry about being in a car accident the rest of your day. But everything in life is a gamble. Okay, that's philosophy. Then back to trading. You yelling again. If you enter this right here, it's kind of stupid. Forex trading is really, really stupid if you do it like this, because now look at your risk structure. It could go all the way up here and it could still be valid and it could come back, but it will be halfway to stop loss. Kind of not the best idea, not the brightest idea. Now, let's say instead you do this. You wait for it to go up there. Your stop doesn't have to be all the way up there. Maybe you drag it just a little bit down here, and then also you drag your target up here because it only has to be a 1-to-1, right? But even a 1-to-2. Right, the same target is like before your original target for a 1-to-1. If you were an impatient effing idiot, even if you're using a 1-to-2, it's before the original 1-to-1 target. All you had to do was wait, right? Now, you won't always get the setups to set up like this. It's really funny. You won't get the setup to set up. Trader humor. But if it does set up, then that means that you do get a really good trade with a really nice risk structure and an invalidation stop loss zone that's even farther than it was here, so it's even less likely to stop out, right, as compared to if you just enter down here with a tighter stop loss. And you have a better entry, better potential for profit, and you know what, the trade probably will work out even quicker because the target distance is a lot closer and the stop distance is a little bit closer, like relatively, right? The stop distance here was 200 pips, the stop distance here, if you wait, not an immature, impatient idiot, it's only 142 pips, right? So it's about 25% closer than that. Same thing with the target, 147 pips, this is 200 pips. So it just allows it to play quicker. You want to be this guy. This is the guy that your wife is cheating on you with. I'm not saying it's me. I'm just saying, my trading terminal, I'm waiting for trades like this. You should wait for trades like this too. You should change your name to Chad. Maybe we'll hang out sometime. So if price gets up here in this resistance zone, that's what will be the better opportunity. That's what I'm waiting for on EuroCAD. Let's do one more. Let's try to find one more little fun thing. Okay, GBP CAD. Price is now broken above this zone. I didn't sell a price right in here again because we had a big, scary, bullish candle. There's no exact methodology. There's no black and white. There's no absolutes. I don't have a stupid trading strategy to tell you where to wait for price to get to the resistance on daily chart and then wait for a 1 hour bullish engulfing candle to pull away, and then if it goes back to the institutional imbalance zone for the retail buy side liquidity, then you can enter the sell with the stop above the candle. There's no specifics. It's just me looking at the damn chart, using my discretion, using my intuition, using my experience, and then just making a informed, reasonably contextually appropriate decision to either buy or sell, and then also decisions to either elect to maybe not take a trade sometimes, because I'll maybe look at something and think like, okay, that doesn't look good to me, maybe I'll just like not trade that, so I just won't take the trade. This was one of those things. I was like, oh, big scary candle, no bearish sensitivity, another bullish candle pushing deeper into the zone. I ran out of there faster than a very promiscuous female in church. I ran very fast. I just ran away. I started sweating. So if I broke above the zone, what am I doing now? Well, here's what I'm doing. Here's my magical idea, right? You can use higher highs and higher lows to support resistance zones, because what does price do? Price makes a high, makes a low, makes a higher high, higher low, higher high, higher low. You could yawn as I'm doing all this, right? Because it just does the same thing. So all I'm saying is if price gets up here and makes a higher high, I'm just saying I think maybe it'll then fall away for a bit and make a higher low. And if my risk reward is like this, right? If I have a stop, if I have an entry somewhere here, this happens to be like the 1.86 price handle. If my entry somewhere here and my target's somewhere up, sorry, my stop is somewhere here, my target's down here, then this is fine, right? If the pullback, even if it goes even further, right? I'll be out of the trade way before then, like, because if it bounces here, it'll be good. And guess what? If it goes a little bit past the area, because it's a general region, and then it still stalls somewhere, and then it starts to pull back, I'm probably going to end up in some amount of profit. You know, maybe in many cases, worst case scenario, it might just be a break even, right? But in this case, price would have to just rocket all the way up to here, which when is the last time price made a 1,500 pip move? Huh? This was a big move. What was that? That was only an 840 pip move. That was probably the biggest one. What was this right here? This was a, oh my god, the trade, what is this? 600 pips right there. Let's see what this was. This was a 700 pip move, right? All I'm saying is it, could price make a 1,500 pip move? Yeah, maybe, but usually it doesn't. Usually like the most extreme moves were like half of that. All I'm saying is that if price gets into this general region, how much of a move will that be? Let's start from this, okay, we need to be fair. Let's start from that low right there. That's about a 900 pip move. Still, that's a little bit more than the biggest move was in the past. And we're not even starting from the absolute way down there. Absolute low there. We're just starting from the most recent low to the leg up here. That'll be 900 pips. That's still more than any of the recent moves. Now, how did I come up with this trading idea? Well, I don't know. I just looked at the damn chart and asked myself, what do I think is reasonable given my experience and stuff? And again, all this stuff that I just explained to you in the past like 3 minutes here, you know how you can do that? Price is making higher lows and higher highs and higher lows and higher highs. And then it goes and makes the higher high, and then you sell. And then if it just stops making a higher high and pulls back and makes a higher low, you profit. That is all this type of trade is. And that is what I'm waiting for. And it's very, very simple. Why is it so simple? Because I'm just looking at the price making higher highs and higher lows and just thinking, you know what, it's reasonable to think that if it goes and makes a higher high, then maybe it'll pull back from there and drop. The same thing for GBP and NZD. I have an alert here at 2.3. I just think that'll be like a high enough move here. Like this impulse was 1,100 pips. That big impulse there was like 1,100 pips. This impulse here, that would be 1,300 pips. So I'm actually being very conservative and just waiting for literally just a huge move. Probably waiting too long. Probably going to miss a trade on this, and that's okay. But if that occurs, look at how good the risk structure is. So you enter a sell up there. Even if you're stopped way the hell, like almost 600 pips away, it's like 570 pips away. Your target, like look how easy that would be to get hit if price goes that far, right? You enter a sell there, and then price just tugs back just a little bit. Relative to how much it can usually tug back, like that's, you're not asking for much, right? Price could pull all the way back down here, close to its set of previous lows, because it's had some pretty steep pullbacks over the course of this trend over the past like year. If price just has a little tack away from its high, right? You don't even have to use a stop that way. What if you use a stop like that? Now, what does your target become if you're doing a 1-to-1? Something like that? Look how reasonable that is. You're buying and selling with super simple analysis, using super simple logic, buying and selling at support resistance zones. With prices making just higher highs and higher lows, you're just thinking, well, you know, it's been making higher highs and higher lows. So if it makes a higher high, maybe it'll stop there, pull back a little bit, make a higher low. Maybe I can do the bounce there, then maybe you can buy and get back into the trend or do whatever the hell it is you want to do. All I'm saying is get some experience, but keep it very, very simple. If you do the same thing over and over again, you will realize that Forex is really stupid. Trading Forex is really, really so stupid. But it's so stupid in the easiest way that, like, why is it this stupid that I only have to draw a stupid little rectangle on the chart and enter a trade and I can make tens of thousands of dollars a month trading Forex? I don't know. That's just my 2 cents coming from a person who has a decade of experience trading. If you're not my free Telegram channel, make sure you click the damn link in the description or the pinned comment. I'll put it down there as well. Join my free Telegram channel. Just go and check it out. Like, it's free. It's just, you could be in there in 10 seconds. If you don't like it, you just leave. You don't even have to click the join button, right? All I'm asking you to do is just go and look at it. I make these videos so that you can get a lot of value and so you can learn how to trade. And I'm sharing it all because I have nothing better to do here in my high-rise apartment every day except yell into a microphone at you to learn how to trade. If it's your first time here to my channel, welcome in. And if you like this video, remember to do whatever the hell you want to do. I'll see you in the next one. Bye.